Hey, what's going on, guys? Neil here, bringing you a brand new video. Hope everyone's having a fantastic day. Today, I wanted to bring you guys a video on the complete history of a bear market and talk about what defines a bear market and where we could potentially see a bottom for the stock market, specifically tracking the S&P 500. So, getting right into it, we have this article here, and I'm going to dig into the S&P chart a little bit. So bear markets are normal market trends or signs of stocks going down in value for an extended period of time. Since 1928, the S&P has experienced 26 bear markets. So what defines a bear market? A bear market is one where the market declines 20% or more over at least a 2-month period of time. Bear markets indicate a downtrend in the market and can be triggered by a market correction. When the market drops between 10 to 20% in a short period of time. Bear markets can be part of a recession where the economy has high unemployment and negative GDP output. So 2 negative prints of GDP is usually what leads to a recession as far as the definition goes. Bear market doesn't necessarily mean a recession. Everyone's going to kind of have their own definition of each one. So it's important to understand that the cyclical nature of markets, capital markets are cyclical nature. For every bear market, bull market follows. For the same 26 bear markets seen since 1928, there have been 27 bull markets. So long term, it's not really something to worry about. It's really a good time to enter the markets and start dollar cost averaging in. And, short term, if you're in trades, obviously it's not going to be the best thing for you. So basically what happens is investment value goes down. It's really that simple to just sum that up here. So to talk about the 28 bear markets that have happened since 1928, the average decline was 35.62%, and the average length of time was 289 days. So we're going to talk about basically each, not each one, but we're going to take a look at some of these and say, hey, it's historical bear markets that led to recessions. There's quite a few that led to recessions, and that's really going to be with a really negative GDP and extremely high unemployment. And, in 29, we saw 24.7 employment and decline parallel to 12.9% economic contraction. Important thing here, I think, to take away is 35.62% decline, and the average time was 289 days. And so obviously history doesn't tell you exactly what's going to happen in the future. Every correction is going to be different, but it's good to take a look at history to try to determine where the market could potentially bottom and when it could potentially bottom. I definitely don't recommend trying to time the market, but it's good to at least keep an eye on these factors and decide when you want to start averaging in and buying these dips. So as you can see, it goes over some of these other bear markets that led to recessions. The bottom line is basically investors need to understand that bear markets are part of the investment landscape and part of a natural market cycle. So basically, you have to be able to withstand these bear markets. Obviously, the S&P, if you just look at the chart, it looks like it goes up and to the right only, but there's a lot of big corrections that come with it. And I know a lot of new investors, let's say you start investing, late last year, are going to be kind of shaken up by these big dips. But it's important to stay calm and understand the bigger picture and buy good assets for the long term. So if we take a look at the S&P 500, which is going to be the most traded ETF on the market, and that's what this bear market was tracking. So far, if we look at the top of the market all the way down to the bottom, right? So the top was here in about December, and then the bottom was recently here in May, and then we've had a nice little bounce. But if we take it from top to bottom, so far we've had a 20% correction. So that would indicate a bear market, followed by 133 days for this to happen. And this obviously, if we go up to here, this correction is only going to be like about 14-15% now. So it's important to keep an eye on this, because if the average length, going back to here, average length was 289 days, and the average decline was 35.62. So according to history, obviously history is not necessarily going to repeat itself. There could be more to come. And what would cause more of this to come is, the interest rates, which have already risen a ton, all the geopolitical concerns, negative GDP print, seeing where inflation print is as well. All these things are going to be big factors into seeing where the market goes. So for me, I'm going to be dollar cost averaging into good assets in the stock market, and I'll make a separate video on, similar video to, the history of bear markets when it comes to crypto, and I can take a look at Bitcoin there and talk about that. But for this video, let's just stick to stocks. I think it's important to start dollar cost averaging into good assets. Understand that we could easily go down another 20%, and if history repeats itself, then we could be in for some more red territory here. Maybe that'll take us, to another 3 months, let's say another 100 days. That'll take us towards, end of the summer. So yeah, definitely keep an eye on this. I just wanted to give you guys some of my insight. Coming back to this, we can talk about, that 2009 correction. 2008 correction was a very long one, obviously. 2009 was a lot shorter. And then obviously in 2020, we had a very quick crash from the whole coronavirus. So definitely keep an eye on this. I'm going to be watching the S&P very closely, as it's kind of like the big ETF and something to track the overall market. If you guys really do enjoy this type of content and want me to do more deep dives, let me know. If you guys have any video requests down in the comments below. If you could like, comment, subscribe, and share this video, that would help me out a ton. And if you guys want to contact me, the best way to do that is join my Discord. It's a great community, and you guys can talk to other people in there and message me directly. And if you guys want to check out my affiliate links below to get some free stocks or crypto just for signing up, definitely do that as well. Hope everyone has a great day. Thanks.